There's some days that I be, I wouldn't say stressing over the bills, but cognizant over the bills. And we're about a month into our new home. That first mortgage is about to hit. And I'm like, man, I'm balling on a budget. You know what I'm saying? And then I realized, I'm balling on a budget. It's not that we don't got money. It's that we just spend it all. Comment if you agree. But then I just feel so blessed because I just walked out. I walked out and half of my street is blocked off because they're about to repave it. It's a brand new community. And they're about to repave it to make it a darker black. That's about to look nice. I mean, I guess they're still doing construction over there, but look, that's pretty decent. With a little bit of rainwater, it's going to clear out. But they said, nah, we going to repave it for you guys. Actually, they should be started in a minute. I'm going to show you guys what that looks like. All right, I just got back from the gym, got the wifey some flowers, and look at this. I cannot be tripping over my high-ass mortgage. We just moved in not even a month ago, and they're already repaving the ground. Look how nice that's some nice asphalt. And look, they're doing block by block. Yeah, I gotta walk to my house right now this morning, but I'm not mad. Look at this. This is like Wisteria Lane. Look at that.
According to this article, home prices and mortgage rates are skyrocketing because of inflation. Here's all you need to know about it. Ever since February of 2022, interest rates started climbing up, and that has caused people to have basically unaffordability for housing. So what used to be a smaller payment, now most of your mortgage payment goes to interest. So the affordability for people on houses has really changed. Now, according to this article, you have to have $114,000 a year income in order to just basically afford a house. I know in other certain parts of the country, like California and the East Coast, it's even worse. You got to make even a lot more to afford a house. But hopefully, as things start to change and inflation dies down, the Feds will lower interest rates. And when they do, it'll be a buying frenzy again. So what I see is if anybody can afford to buy a house now, buy it, and then refinance when interest rates go down. Because when interest rates do go down, you won't be able to find a house in the market anymore. They'll all be snatched up and prices will start going back up on houses. There's quite a bit of inventory out there right now. There's lots of choices. People have had to do some price reductions. Houses have sit on the market longer. But once interest rates drop a bit, that'll change. If you can buy something, buy it now. So what do you think about the current housing prices and mortgage rates?
So the mortgage rates are back in the 7s. And I know that last week I literally came on here and I was so excited because we were seeing rates in the 5s, and that was 7 days ago. So if you don't know what the fuck is going on, let me explain it to you. And if you're new here, I'm Theony the lender. I've been a lender for 10 years. Let's get into this. Okay, we're gonna get right into it. If you don't know what this is, it's the 10-year treasury. The interest rates move with the trend of whatever this is doing. So last week was when Trump's tariff plan went into effect, right? So what we saw on Friday, on the 4th of April, was the 10-year that just literally did a nosedive, which means that most mortgage rates were in the low 6s, and I even saw high 5s for some VA loans. And I even had some clients that locked in a rate in the 5s, whether that was for a purchase or for a refinance, but more on that later, just stay tuned. So anyways, this happened last Friday, which is when I made my video. And then what happened? This huge, sharp increase, and now we are seeing some of the highest levels that we've seen all year. So yeah, we're back in like the 7s. So within 1 week, we saw the best rates that we've seen since 2022 on Friday, and then the worst rates we've seen all of 2025 so far. So here's what this tells me. Number one, if you have bought a house in the last 2 years and you're not on some sort of refinance list, I have one in the link in my bio. Make sure a mortgage lender that you trust is actually watching these mortgage rates. You're on their list. Because last Friday, I had clients that were sitting thinking that the rates were going to fall further down, and they were trying to refinance out of the high 7s rate. And I had some clients that just said, okay, yeah, like $200 a month is good enough in savings, let's lock in. Those people are moving forward with their lower interest rate. And the people who are waiting on lower rates, well, now bestie, we're back in the 7s. So make sure that even if it's not my refinance list, and I do have it in the link in my bio, so you can go and add yourself to it if you want, it's somebody's refinance list of somebody who you trust, so that when this happens again, these windows of opportunity seem to be shorter and shorter. And so especially if you are looking to refinance and save money, figure out what that monthly payment savings goal is and what is that interest rate that needs to happen for you to just lock in and move forward. Because honestly, guys, I have seen some crazy shit this week. Like, rates are repricing every day, multiple times a day. So like on Monday, we got 3 different upticks in the rate. And so I got emails saying pricing's getting worse. So if anybody went under contract over the weekend, I was super quick to try to lock them in as soon as I could on Monday morning. So all of this with rates is all about strategy, but it's also about being prepared as a consumer. And a lot of people are always trying to bet that the markets get better, which I understand because it is an emotional purchase and it's an emotional transaction to also refinance that rate. However, you have to a little bit take the emotion out of it and figure out what we call your strike rate. Basically, it's the rate that you feel the most comfortable with. So if you are going to buy and 7.5% monthly payment for you is totally out of reach, then lock in the 7. Don't try to wait for it to go into a 6. And for refinancing, like I said earlier, figure out what monthly savings would get you comfortable enough to move forward with a refinance. There's a lot of volatility happening in the market right now. People are getting very emotional. They're doing a lot of emotional selling of stocks. And so it's going to get worse, I think, before it gets better. But just be prepared for when it gets better, because it could literally be like one day like we saw last week, or it could be 2 hours. And I am accepting new clients, so head over to the link in my bio if you're looking to buy sometime this year or to refinance, of course, and follow me along for more mortgage.
$3,400 mortgage payment gets us a 1,200 square foot house, half a mile outside of downtown, and we also live on half an acre. Many people in the comments are not taking into account the fact that we bought in 2024 when interest rates were like 7.5%. In comparison, this is what a $400,000 loan looks like with 7.5% rates versus a 3% rate. Like, a lot of people comparing their mortgage prices to us are not taking into account that we bought in 2024. We also knew that the prices in this neighborhood were not always going to be as low as we got this house for, but also our hope is to refinance as soon as rates come down a little bit. Mortgage payment is not ideal. However, we're making it work. The house has already gone up in value so much since we bought it. We've redone the kitchen and one of the bathrooms. Several houses on our street have sold in the past couple of months for astronomically more than we bought our house.
Guys, tell me why my mortgage went from, don't judge me here, $3,200 a month to $5,600 a month. Backstory here is I was looking for a house back in 2022, and I put in offers on multiple homes. So we decided to go, they got declined, and they wanted 50 to 60 grand over asking price for the homes with no contingencies and all that kind of stuff. Long story short, I bought a new home with Ryan Homes. The worst decision I've ever made in my life, I swear to God, and I am paying for it till right now. Long story short, I'm actually selling that home right now. Bought a mortgage with Ryan Homes, and I am the last house that's built on this subdivision, the absolute last house. When I signed on the dotted line, my mortgage was 32 and some change. And I was fine with that because that's what I expected, the size of the home, X, Y, Z, yada, yada, yada. Come to find out that, again, I had a realtor during this time, but with new construction, Ryan Homes doesn't pay the realtor a commission. So I was like, well, okay. I'm not going to ask him to come in and do any kind of work because he's not going to get compensated for it. So I let him know what I was doing, and then ended up being no realtor. So anyway, next thing I know, I get the first tax bill on the property with land. On the property with the home built. The taxes were $16,000. $16,000. So that's not not the half of it. So I then go call, like, hey, is this right? Is this correct? Like, yeah, that's your correct property taxes. We're not sure why, but Ryan Holmes should did your estimate based off what your taxes could be on the home, because you're the last home built. So there's plenty of comps in the area that they can use as, hey, your taxes could be this. However, they use taxes off the land because it's going to show you a cheaper mortgage. Okay, so I'm like, okay, so what do you have to do? Well, you got to pay them, so your property taxes go up. Okay. The next part of this is that being that my property taxes will be this, and being that the property taxes were underestimated for that year of 2023, I believe it was. Now my escrow account is negative $11,000. My escrow account is negative $11,000 because Ryan Homes only used property taxes on the land. So now I not only have to get my current property taxes updated into my mortgage, now I have the rears back taxes in my mortgage. People, when I tell you I almost lost my shit, I did lose my shit. I'm not gonna lie, I lost my shit. I completely lost my shit because this is something they don't tell you about new construction. And people will say, oh, you should have had your realtor, you should have had your attorney. And that, I guess I take the hit on that because I'm thinking I'm not going to use my realtor who I've been using to show me these houses because Ryan Homes, they don't pay a commission off the sale. So I'm like, man, that's not right. I'm not going to use my realtor to come in and do free work. I'm going to have to pay out of pocket for my realtor. And then So mortgage went from $3,200 to $5,600 a month. And I'm like, yo, this can't be right. So now I'm looking up property taxes in Libertyville and Vernon Hills on houses that are places, nicer areas than this. This is Antioch, Illinois. No knock against Antioch, but it's not Libertyville, it's not Vernon Hills. It's nothing. There's no restaurants. I mean, there is a few, but it's not built out like that. The infrastructure isn't in place like those places is. And I'm just kind of like, what the So, long story short, I know I said that before, but this fast forward. I'm sorry saying that. Fast forward. Unfortunately, the home that I thought I was going to be in for 7-10 years that my kids would grow up in, I'm selling that home because we can't afford it. And I refuse to be house poor and paying for a house that I'm just trying to keep up with. There's no way possible I'm going to, and let me say this too, is that the mortgage will end up being, even if I didn't have the taxes in the rear, escrow account, the mortgage will still end up being, I did the math, it was like $4,000 something a month, right? Because my principal and interest was like 27. The property tax was like another 13 something. So it was like 4,100 a month. No, absolutely not. I refuse to pay $4,100 on a house, property taxes on that amount, and you don't have anything to go off of. So yeah, guys, if you are thinking of doing new construction, if you are thinking going with a Ryan Homes, if you are thinking going with any new construction, any new development, specifically Ryan Homes, make sure that you look on that paper and it doesn't say, when it says taxes, make sure you ask them, is this property on the house after it's built what it could be or before? Because if you see something that says, unless you're in a different area, stuff like that, I get it. I'm in Antioch, Illinois. If you see something that's like $2,000 or $3,000, property taxes, make sure you ask them, hey, is this on before the house is built or after the house is built? Because they can estimate what your taxes are going to be based off what they sold you the house for, right? They can do that. So, will they? Probably not. But again, Ryan Homes, because you screwed me. You have effed over my life. And this has set me back tremendously. I did a lot of hard work to build my credit, save money for a home, and I just gave it away because it's crazy. There should be something in the laws that says new construction builders should have to show you property taxes on what the home value, what your property taxes are going to be, because that would change everything. That would change your mortgage. That would change everything. And I would have told them, no, I'm good. I'm not buying this. I'm gonna keep looking. But it is what it is. Looking for a new home. Here's to chapter 2, starting all over again.
And they think that they can get me at 4.49%, I think.
Whoa, that's a big jump from 2.1% to 4.49%. We should definitely take a closer look at that. I can tell you that we've been seeing some pretty competitive rates in the market lately, and I'd be happy to run some numbers and see what we can do for you. Would you be open to exploring some other options with us?
Yeah, for sure. Do you think that you can beat that rate?
I'd be surprised if we couldn't, Mitch. We work with a wide range of lenders and have access to some really competitive rates. Let me just check a few things real quick. Based on your current situation, I think we might be able to get you something in the mid-2s, possibly even lower, depending on a few factors. Can you just confirm your credit score is still in
this article, home prices and mortgage rates are skyrocketing because of inflation. And now you need to make over $114,000 just to get you one. And most people just plain old can't afford that, which creates a unique opportunity for those of us who can. And since banks require such a high down payment, it knocks the average man even further out of the ballpark. Things are getting rough. And this is why we don't go to the MLS to buy our properties. And as a rental property owner, this provides a ton of opportunity for years to come. We stay away from the MLS because it requires high down payments and increase in interest rates. We primarily focus on taking over existing mortgages where the homeowner has fallen behind. This creates a unique win-win opportunity where we're able to come in, catch up those payments, help them avoid a foreclosure, and give them some money so they can move on to the next chapter of their life. We think of it like profit with a purpose. We get a low interest rate, plus we making money at the time of purchase. What are your thoughts on home prices and mortgages? If you want to be a real estate investor without having to do any of the heavy work, come and invest to learn more.
Fold some laundry with me while I explain why our mortgage company upped our bill an extra $400. I know you've all been dying for the explanation. Is Ronnie, I am a 29-year-old stay-at-home mom to 2 under 2, a Navy vet and a Navy wife. Talk literally pays me for your time. So all you have to do is watch this whole video through and at least 5 words, engage, share it out, save it, like it. Currently $17,717 in credit card debt. This is day 3 of trying to pay off that credit card debt. It's our fault for being naive first-time homeowners and not really understanding our monthly statements, how escrow works. We're trying to educate ourselves so that we can be better homeowners. I'm a disabled veteran, so we're not supposed to be paying property tax. We were under the assumption when we closed on the house that we wouldn't be paying property tax. Talked about when we were signing papers and we turned in all the paperwork saying I was a disabled veteran. We turned everything into our county as well, so they had all the paperwork they needed. So we were under the assumption that everything was taken care of in that sense. In November of 2024, our mortgage company added our property tax to our escrow. Had no idea. We get the monthly statement. There's a lot of like negatives, pluses. We would just see our monthly amount and we're like, okay, everything's good. Never paid close enough attention to that they had added our property taxes, so escrow was in the negative quite a bit. May of this year, which would have been like a full year of us owning the house, they added our insurance to the escrow. If our property taxes hadn't been added, we would have had positive. It would have been taken out for the insurance and we would have been good. In June, when we got hit with that, almost $600 more than what our monthly payments have been. It's like, what the heck is going on? Looking into it, we called our mortgage company and they were just like, your escrow is negative, that's why it went up. And we're just like, well, why is it negative? Like, what happened? We can do, we're still trying to like look into it. We're gonna just have to bite the bullet and figure it out, pay off that negative escrow. That's even possible. I don't even know. Our mortgage company have just been kind of like assholes about the whole situation. Mortgage company knows now that we don't pay property tax. I feel like they lied to us about quite a few things because they said that our county kept sending them the bill with the amount that we owed for property taxes. And we're like, that's not right. And then we would call the county. We're like, we've never sent anything to your mortgage company. We have the statement saying that you don't pay property taxes. So frustrating because I feel like they're lying and kind of like manipulating us. I appreciate everyone who's coming along for the journey.
Pack up the house and give it back to you. You can have it. If you own a newly constructed home or you're buying a newly constructed home, stay here. So tell me how I signed a document, all the documents signed, your payment 1907, and you signed 1,000,000 documents. Now a year later, they hit me up in February talking about your payment is 3450. I bet it ain't. I bet it's not. So the first year when you buy your home, your newly constructed home, they're only charging you for the taxes, the property taxes on the land, the raw land. Well, the land was only worth $60,000. Well, now that the house has been put on it and now there's a development around you, that now that land this year is worth $110,000, and they put a 400 and something, almost $500,000 house on top. So now your taxes are going to go to correct. So now your mortgage is going to increase. Now, when they done tell you got a fixed rate, you got a fixed payment and all, they not explaining to you that the property taxes will increase that payment. My payment went up to $34.50. How? Because I can pack up the house and give it back to you. You can have it. So they send a little letter. I called because with this letter, don't send no letter when you talking about my money. I called a lady. The lady basically telling me, yeah, somebody should have told you. They didn't tell me, ma'am. And that's another thing. Your realtors, some realtors, they gonna comment. I tell my clients that was your realtor's fault. That was your okay, but we not here for that. I'm here for the people that if y'all have experienced this or if y'all about to experience this because it's y'all first house in y'all newly constructed home. The taxes is not right. Pay extra. Let me tell you how crazy it was, because when I signed the paperwork, they said your payment, like the lender was, my loan originator was like, your payment gonna be $2407, but when we got to the paperwork, it was $1907. So then I said, hey, it's supposed to be 24. You said he said, no, don't even worry about it. That I always overbid. So when you get here, I can give you good news. And I'm over here giving him brownie points, sending him edible arrangements and shit. And nigga, you knew it was supposed to be 2,400 because the taxes, you didn't say that. So now I'm paying 1907, happy as hell, paying 1907. And then the next year come in and I gotta pay because the escrow didn't have no money. They done paid the taxes for me. Sir, lender, I didn't ask you to pay the tax. Don't pay the taxes on my behalf. You better call me and tell me my escrow was low. So they done paid the taxes. Now they talking about I owe them $34.50 a month for the next 3 years, or I can come out of my pocket 17, 18. We is struggling. The county, the city, the states, America is dying.
We're talking about mortgages. We're building a 2025 modular, and I didn't realize how many people didn't actually know the little things or the other things that are tacked on top of your mortgage. One of them being your escrow, which is your property tax. So your property, your house, everything combined, what you pay monthly instead of paying a yearly lump sum at one time. Another one is homeowners insurance. Hopefully you have homeowners insurance. Make extra payments if you can. Even if it's only like $25-$50 and you want to put that towards principal, do it. Because for us, our loan, after everything's all said and done, we sell our current property, we're looking around $180. And that, if I pay an extra $250 a month on that, it saves me 5 years off the life of my loan and $31,000. If I didn't, I just made like the minimum payments for my mortgage, everything with escrow, insurance, all that combined, because we don't have no HOA or anything like that. It is going to be $229,000 in interest, okay? On top of the 180. Do the math on that. That is crazy, but I just wanted to say that there is a lot more than just a strict mortgage payment. And I didn't know some people knew that, some people didn't know that. You have, of course, your escrow, your insurance. If you have an HOA, if you live in an HOA, and this is separate from like your power bill, your water bill, all that stuff. But I just wanted to throw out a little information, a little heads up for like new home buyers.
The current homeowner crisis, specifically the mortgage payment of revelations that people are going through, it's not surprising to me. If you don't know what I'm talking about, people are on here saying that after the first year in their new home, their mortgages are going up $1,000, $1,500, $2,000, sometimes double the cost of their initial mortgage. A couple of things that are going here. They had a FHA loan, which if you don't put 20% down, you have to get homeowners insurance. That's causing a problem. These people are buying new builds. Everyone's so excited about new builds. Yeah, new builds in a developing community. But when you bought the house, it was $160. Now that the new community is more built out, the house is worth $500,000, $750,000. Those property taxes are taxing your ass. Now you got problems. There's escrow. There's all sorts of things going on. And when I said years ago that people shouldn't rush to buy a house, everybody was saying, oh, don't listen to him and all that. You can find it. It was on Twitter. People swore I was the devil incarnate. But I knew a couple of things, especially because a lot of these people who are in shock about their mortgage payments doubling and tripling are black people who are never told the financial literacy of what they actually are buying. For instance, black people always want to feel validated. You go and get these possessions that people have, not knowing that they're setting them up in a mechanism where you aren't as successful as them. Not saying it's only, but I guarantee you that's part of the problem with us. Secondly, owning a home as a single person is nasty work. Like in this economy, no one not married having a 2-income household, unless you are a millionaire, should be buying a home. But y'all be so pressed to get these possessions, you don't care the status that you buy it, and then we'll have buyer's remorse when the repercussions and the escalators kick in. I'm sorry y'all are going through this, but let this be a lesson to you to stop thinking just because you make enough money or you qualify that you understand finances, financial literacy, or money management, because that is a completely different skill. Making a lot of money and managing the money and making the right purchases are not the same skill.
It's Joe from Georgia. You know, all those interest rates that were said to be going down on day one, they were going to go out there and they were going to make sure that mortgages were more affordable, that credit card debt was slashed. That was those promises made during the heat of a campaign to win at all cost. Well, we're 4 months in, and guess what? Mortgage rates are about their highest. They are the highest they've been in the last 5 years. About a 7.5%. And you can look at that by looking at the Treasury bonds. When those yields start getting up to the 5% range, 6% range, and they're headed that way, well, they're already there at the 5, you're going to see that there's not going to be lower mortgage rates. It's just not possible with the way it is. And that's caused by the United States credit when we were downgraded by Moody's from AAA to A1. So I can tell you, not only have we lost our credit rating that was spectacular for 100 years, now you're going to see interest rates even continue to go higher, because it would seem that maybe they should work on that in Congress, you know, because Donald Trump did make a promise. You don't think he would break his promise, do you? I just can't imagine.